Okay, good afternoon, everybody, or good morning if you see this on a beautiful Monday morning or whenever you want to see it on YouTube. My name is Alexander, and together with Olivier and Lauren, we're gonna present some insights about doing business in Belgium. Let me show you the table of contents. So after a quick introduction of ourselves, we put in the focus on Belgium as a business hub, as a logistics hub, as you will see, and what are the key business sectors and opportunities in Belgium, and how to set up a Belgian company or how to set up business in Belgium. Afterwards, Olivier will tell you more about the Belgian taxation system. And in case you would have any questions at the end of this session, there's a Q&A session. Of course, our contact details are also known and put on the slide. So if you would see this on a later stage on YouTube or any other social media channel, then do not hesitate to give us a call or send us an email. Who are we? Well, as Margot told, we are the two member firms of the TGS network in Belgium. I myself, I'm Alexander, and I'm a partner at DNF. DNF is a Flemish, so in the north part of Belgium, a company specialized in tax and accountancy services. You can see it on the slide, what we do and who we are if you want to see it more in detail. You also have my contact details here on the slide and some quick background on who I am, and also my colleague Lauren, who will present some slides afterwards, is mentioned here on the slide. Afterwards, when he starts, he will of course give a quick introduction of himself as well. CFG is the other member firm of the TGS network in Belgium, and I give the word to Olivier to quickly introduce himself as well.
Yeah,
Olivier.
thank you, Alexander. CFG is a one-stop shop firm with 32 collaborators. We offer through our team, which is composed of accountants and legal advisors, quality added value services, and we have a unique expertise in accounting, legal and tax advice. We are also specialized in M&A cooperation, and we support our clients at all stages of this operations, from the initial price negotiation to the finalization of the operation. What else? We have 800 clients which are active in various sectors of activity, like industries, new technologies, life science, retail, holding, management, real estate, and so we not focus on a specialize on one particular sectors, but we can assist our clients which are active in a various sector. We are two partners, Olivier Bastes and myself, and our firm is composed of different departments which can advise the client in accounting or legal or tax. I let you, change the slides. Okay, thanks. And you have my contact details also on the slides, and do not hesitate to send us an email or call if you need. Thanks, Alexander.
Okay. So indeed, as the two member firms, as we mentioned, we're located in Belgium. We're gonna not talk about France or Holland. No, we're gonna talk about Belgium. And I do give the word to my colleague Lauren, who will tell us more about Belgium and why Belgium is an attractive business country.
Hi, good afternoon, everyone. My name is Lauren. I joined DNF about 1 year ago, and I'm together with Alexander, part of the tax and legal department of our firm, and together we support businesses, both Belgian businesses as foreign businesses, by developing their business in Belgium, not only from a fiscal point of view, but also from the bigger picture, financing, etc. And maybe let me start by saying that Belgium is a beautiful country, as you can all see on this slide, and maybe despite the fact that we will sometimes maybe speak somewhat negatively about our country as concerns complexity and slowness, I think we will make clear today that Belgium has a lot to offer, both from a business point of view, but also culturally and maybe as a society as a whole. And maybe for the attendees who do not know Belgium, we are this little country which is within the heart of Europe. And I say a small country because in terms of surface area, we are only on the 23rd place of the 27 EU member states. But despite this limited surface area, it's always nice and busy in Belgium because we have approximately, I think, 11.8 million inhabitants in our country. And we started by saying that Belgium is in the heart of Europe. And I think this has a lot of advantages, which also will become clear during our presentation. And I think one of the main characteristics of Belgium and as concerns the business development is the fact that we have a lot to offer from an infrastructural point of view. I think everyone knows the port of Antwerp, which is one of the biggest ports in Europe, and I also think of the world. We have this port of Antwerp, which offers a lot of opportunities as concerns logistics and consumer distribution. But besides the port, we also have our national airport in Brussels, which is also the capital of Europe. But besides that airport, we also have Liège airport, which is not that known for the individuals, but which is an, I think, important airport for example, Alibaba, who chose the airport of Liège to import all of its goods to China and use Belgium as its central hub to distribute all its products all across the countries in Europe, but also, I think, outside Europe. And we started with the port of Antwerp. Belgium is very well known for its maritime shipping, but besides that, we also have this strong developed inland shipping network where the North Sea port is one of the examples where Belgium tries to use its the canals and the water that is in Belgium to make the distribution within Belgium, but also across Europe, let's say, very efficient. If we then switch to some key figures, I don't think we will need to dwell too much or too long on these key figures because we will try to focus on the practical side today in our presentation. And I think also that at this time, it's not that easy to make certain statements about these key economic figures because we all know that in the past years, these figures, they were influenced by Corona, and also now I think it remains to be seen what the impact will be from at this moment the geopolitical tensions that are here in Europe. But I think maybe the most important conclusion here, if we look at the key figures like GDP and inflation, is to say that the figures for Belgium, they are in line with the figures of the different EU member states. So I think that these figures that are shown here, they do not result in, let's say, a negative assessment when deciding whether or not to do business in Belgium or open or establish a corporation here in Belgium. And if we then switch to the key business sectors and opportunities, we maybe need to start with, let's say, some bad news, because of course not everything is a happy place here in Belgium. There are, of course, some hindrances or disadvantages here in Belgium of doing business. And this is also shown on the slide where we included a graph from the EY attractiveness survey for Belgium for the current year, where the question was asked, what are the main risks affecting the attractiveness of Belgium in the next 3 years? And I think that the responses that are included in the graph here, they are not surprising to us. The number one is the tax regime and the tax policy here in Belgium. And then I think especially it is the complexity of the taxation system in Belgium, which I think also will be shown in the next slides. It's not always easy to keep up with the different tax policies and tax regulations here in Belgium. Besides that, we also are known for some political and administrative and formalities country. We have a lot of formalities that need to be complied with when setting up the business, but also when carrying out activities or businesses in Belgium. And above that, we also have the problem that we are, I think, in the world with some of the highest labor costs for the developed countries, which is also shown in the snapshots of a recent article that was published in the Financial Times, which caused some controversy here in Belgium, where we are on the #1, but not in a good way, because it shows that Belgium, from all the developed countries of the OECD, we have the highest tax wedge as concerns the labor costs. But besides these disadvantages that are shown on the previous slide, we also see that the EY survey shows that despite these disadvantages that are there, Belgium still is able to attract a lot of foreign investments. As you can see in this list, Belgium is still on the number in the top 10, on number 6 of attracting foreign businesses. And the foreign investments that are attracted in Belgium, they are divided over some different sectors, which, not surprisingly, we started our presentation with that. The main or the key sectors in Belgium attracting foreign investments are related to transportation and logistics. I think that this will be one of the key messages we are trying to deliver today. Belgium has a very strong record as concerns being this central place in Europe, having developed a strong hub character in the heart of Europe. And this is also shown, I think, by the different companies that are present in Belgium, which are not only Belgian companies, but also foreign companies who choose Belgium to establish their headquarters within Europe. And the companies that are here in Belgium, they are divided into different sectors, going from steel and industry to the different chemical companies that are present here in Belgium, not only in the port of Antwerp, which is known for its, I think, the most important petrochemical cluster here in Europe, but also scattered across the country for a variety of reasons, for this strong logistics characteristics, but also Belgium giving a lot of tax incentives and other incentives to attract this kind of businesses, which is also shown by the fact that, for example, Janssen Pharmaceutica or Pfizer, they are strongly represented in Belgium. And then besides that, and this is maybe also somewhat influenced by the Brexit, that a lot of financial companies chose Belgium to establish their headquarters and to use Belgium as their starting point to deliver their services to the European market. So I think that despite the disadvantages that we started our presentation with, the fact that all these companies, they choose Belgium to develop their business, it shows that we have a lot to offer for our businesses. And then I think that the attractiveness of Belgium as a country of doing businesses is summarized by these 4 key points. Belgium is known for the fact that it has an open economy. We also already discussed that Belgium has this central position within the European market. Above that, we have a very highly qualified workforce. And then to end, we will see that Belgium has a lot to offer as concerns tax incentives to attract certain types of business. This slide indeed shows the openness of the Belgian economy. And we can see that both the import and export of goods and services forms a very important part of the Belgian economy. And I think maybe also important to note here is that the number of import and export is somewhat in balance. So it's not that Belgium is only known for being an export champion, but it's still it still attracts a lot of import, not only from goods, but also it attracts a lot of foreign services to our country. So that's the first characteristic. The second one, we already started with that. We have this very strong developed infrastructure and facilities. And I think we are very proud of that. especially here with the DNF, because we are located in Antwerp, is of course the port of Antwerp, which is a very important logistical hub, not only for Belgium, not only for the European market, but I think it has a strong position within the world logistics market. And it explains why, for example, a company like Nike chooses Belgium to establish its logistical center to deliver its goods to not only the European market, but also the African market and the Middle East market. I already also explained that the Port of Antwerp has this very important petrochemical hub, which explains the presence of these international companies like Total Energies, or more recently the investment plans that were announced by Ineos, which will expand its activities here in the Port of Antwerp. But besides the Port of Antwerp, I already explained, for example, the airport of Liège, which was chosen by Alibaba to form its starting point to deliver its goods within the European market. Third advantage of doing business in Belgium, which also explains why a lot of services are attracted, or service industries are attracted by Belgium, is the fact that we have a very highly qualified workforce here in Belgium. And it is not a statement that we would like to make, but it's also supported by the fact that the Belgian universities are amongst the best universities in the world, which is also shown by these snapshots of some journal articles which were published in the last years. And then I think the fourth attractive point of Belgium is the tax system of Belgium, but I will not go into further detail into that, because this will be discussed by Alexander and Olivier.
Yes, thank you, Lauren. So with this very good introduction of how Belgium works and what works in Belgium, we can go on to the body of our presentation, and that is how to start then a business in Belgium. Well, if you want to start a business in Belgium, there are, as in any other country, two possibilities: or you start a new company, or you expand the company that you already have, you expand it to Belgium. And if you incorporate a new company, of course, you will incorporate a new Belgian entity. It will be an existing, it will not be an existing, it will actually be a new legal person. And this new legal person will then be taxed, and that's something Olivier will, of course, talk about as well, will be taxed on its worldwide income. Because it has to file its annual accounts, and in these annual accounts, of course, every income of this company is included. Of course, there are a lot of double tax treaties in Belgium, which I will tell you about a little bit later, which not mean that you are actually taxed on this worldwide income. You only have to represent your worldwide income. If you have income, of course, in another country, you can, of course, exclude it from the Belgian taxable base. As soon as you have profits in this Belgian company, you can upstream them again to the investors via dividends. Another option is to not create a new entity, but to just, let's say, try and do a sneak preview on how it would be if you would incorporate the company and just do the business as you are used to do in Germany, in America, in Congo, wherever you want to be. And you just say, I'm going to expand this business a little bit to Belgium. I'm going to appoint let's say a manager that will investigate and see whether the business is indeed working in Belgium, and then you incorporate not a formal legal entity, but you expand your activities by creating this permanent establishment, by creating a legal branch. In this case, only the income of this legal branch will be represented to the Belgian tax authorities, and only this income is, of course, being taxed, and we have no clue on the income of the other foreign entities within the group. In order to start a business, in order to start a company in Belgium, There are some steps to be made. You need to make a financial plan. You need to open a Belgian bank account. You need to coordinate with the notary and the accountant on the purpose of this financial plan, on the purpose of the company. What are you trying to do? How will you draft your articles of association? What about the share capital? What about the shares that are being allocated? To whom are you going to allocate shares? What will be the shareholders agreement? What will be who will be the directors and what are their responsibilities and so forth? That are all things you need to discuss with the notary and together with your accountant. And then afterwards, if everything is set up, you will be registered in the Belgian Official Gazette. You will receive a company number by registration in a Crossroad Bank of Enterprises. You will activate your VAT number. You will affiliate your company with a social insurance office so that it's also known within all the systems and all the tax administration. And as from then on, you are starting with your business in Belgium, and you can do whatever you want as long as it's within the limits of the law, of course. If you're not registering or not incorporating a new legal entity, you can also choose, like I said, to start with a permanent establishment, with a branch. Now, for a permanent establishment, that's a definition, that's actually a tax definition. You have a permanent establishment for VAT purposes. You have a permanent establishment for corporate tax purposes, and it's not within the scope of this presentation to talk about all the ins and outs and all the differences between these definitions, but make sure that, what we want to try to say is that if you just want to have a sneak preview of Belgium and you just want to have some local presence without actually doing business, but merely try to see whether business could indeed be generated, you can start by registering a so-called representation office. You have perhaps somebody working here, somebody sneaking out on how things are working. Of course, this is not doing an actual business. This person will most likely be liable to tax in Belgium, but the business itself, the company itself, will not have to register itself for tax purposes, for VAT purposes. And that's a representation office. On the other side, there is an actual legal branch, and the legal branch means that you are indeed expanding the activities of your parent company to Belgium and doing the same as you were doing it in, for example, Germany. You will do the same now in Belgium. Then you have to set up a legal branch. In order to set up a legal branch, you need to do a lot of formalities. You need to formalize the decision of the foreign parent entity to open up a branch in Belgium. You need to formalize this decision. You need to translate them to one of the 3 Belgian national languages, which are Dutch, French, or German. You need to translate them, you need to legalize them with the notary, and so on and so on. So it's a quite extensive filing procedure in order to establish this legal branch. But as soon as this legal branch is registered, you can also, of course, start doing businesses and start trying to make good profit in Belgium. This profit will, of course, be taxed in Belgium, and that's why you need to file your local profit. The foreign parent company also need to file the annual accounts of the company as a whole, as if they were be filed within their own jurisdiction. They need to make a copy paste, and they also need to file them within Belgium. So that's how a Belgian company is set up. As soon as the Belgian company is set up, you're of course liable for Belgian taxes. And maybe as a quick introduction before I give the word to Olivier, as Lauren mentioned, although the tax system in Belgium, or the total taxes in Belgium, if you read the newspaper, they seem a bit high. Actually, it's not what you read in the newspaper that is the truth. If I want to say to you how the Belgian tax system works, it's like in every other country, there are 3 pillars of taxation. And in Belgium, one of these pillars is really developed. You have the financing pillar of taxation. Of course, companies and people need to pay taxes in order for the country to work as a whole, in order for roads to be made, universities to be made. And as Laura mentioned, universities in Belgium are quite highly ranked. So this money is quite well spent to these universities. In Belgium, there is also a way of redistributing the money. The Belgian tax authorities are sometimes looked at as if they were Robin Hood, who steal from the rich and give back to the poor. That's also something that the Belgian tax administration tries to do. But more, the third pillar is something that in Belgium is quite highly developed, and that's also the reason why the tax system is for some sectors quite incentives or quite incentiveful. But that's also the reason why the tax system in Belgium is not that easy to understand, because there are a lot of ways for the tax legislation and the tax administration. They try to use taxes in order to encourage certain investments, encourage certain activities, or discourage certain activities, discourage a certain way of living or way of doing business. The easy way is, of course, to tell that in future there are a very lot of incentives for electric cars instead of cars that run on diesel or gasoline. But if you see to the total tax system as a whole, you can see, and that's also mentioned in one of our first slides, we have a strong innovative pharma sector, we have a strong logistics sectors, and that's because we have a strong tax incentive for innovative companies, the innovation income deduction it is called, and we also have a strong tax incentive for innovative investments, which is the investment deduction. And if you combine all these incentives and you combine them with the notional tax regime that is, or the nominal tax regime that is currently active in Belgium, you will see that although it seems high, there are plenty of ways to use the taxes in your favor and to see that you are indeed not paying too much. As a last point before I give the word to Olivier, I just want to say that we are also very internationally focused in Belgium, with approximately 150 double tax treaties. So with almost every developed country that is not a tax haven, we do have a double tax treaty in order to share information and to avoid double taxation. And we also have a highly developed ruling commission within the tax administration. So before doing a certain investment, you can go always to the tax administration to have an advanced ruling on to have a legal certainty on the taxation of an envisaged project, an envisaged investment structure, and so forth. And this ruling commission really works. We have a lot of rulings going on. We have rulings published, so you know where to pay taxes and how much you will need to pay. And on that bombshell, I give the word to Olivier to have some more insights about the taxation.
Thanks, guys. I will try to share my slides.
Marcus, do you have a question? Because I see your hands are raised.
Yeah. Hi, everyone. Just a little question regarding what you said about the incentives you might have with the new investments and some kind of companies over there. Is there any specific term for those benefits when you have the kind of a company like that you said, or to keep that benefit, or once you are in that specific business or you have some specific kind of investment, you get that benefit, you know, from.
Indeed.
Yeah.
Indeed.
I just want to understand that.
Yeah, I think
Sorry to
Olivier.
interrupt.
No, that's no problem. I think Olivier will go on about the taxes and the tax incentives. So perhaps we just wait until Olivier his presentation is over. And if your question is indeed still not fully answered, Marcus,
Okay.
we will come back at the end of the session with a Q&A.
Okay, thank you so much.
Well, do you see my slides? I'll try to share properly. Okay, you see my slides properly?
Yes,
Yeah?
yes.
Okay, good. Well, thanks for attending. Taxation rules of a country are always an important aspect, if not the main aspect for an enterprise to decide if yes or no it will set up a business in a country. Therefore, we will try to give you in 20 minutes a global overview of the Belgian tax system that applies to the companies and permanent establishments. In Belgium, we will talk about, first of all, the tax residence, and then the tax which apply, mainly the corporate income tax, with a brief focus on dividends income and capital gains on shares. And finally, we will talk about some tax credits and incentive. I will not focus on taxation of enterprises that are self-employed individuals, since most of the time, as you know, critical size businesses are companies and not natural persons. Okay, let's start with the corporate residents. Are subject to the Belgian corporate tax law companies which are resident of Belgium and permanent establishments of foreign company. A company is considered as a resident of Belgium for tax purpose if it has its principal place of business in Belgium or its seat of management in Belgium. The seat of management has been defined by different Belgian case law as the place where the corporate decision-making process actually takes place. Although in company law, the registered seat theory has become the new general rule since the reform of the Belgian company law in 2019, so it's quite new. From a taxon point of view, the real seat theory remains applicable. Regarding the permanent establishment, in general, a permanent establishment exists when there is a fixed place of business through which the business of an enterprise is wholly or partially carried on. In order to determine what a permanent establishment in Belgium is, we have to refer to the double tax treaties concluded by Belgium. The second point is to which tax, finally, an enterprise will be subject in Belgium, a Belgian company or a permanent establishment. First of all, the corporate income tax, of course. In general, the tax base for corporate income tax proposed is determined on an actual basis and consists of worldwide income plus allowed deduction, being understood that the double tax treaties have to be respected since they are the most important legislation. It comes before the internal legislation. The rules are equally applicable to companies and permanent establishments, and it is assumed that all income received by a company is in principle business income, and the income tax, Belgian income tax, is based on the BGAP, Belgian GAAP, financial statement of the company or the permanent establishment. The rates, the general rate is 25%. And it will apply to Belgian company and Belgian permanent establishment. This is the same treatment, tax treatment. But the small and medium-sized companies are able to profit from a decreased rate of 20% on the first bracket of 100,000 euros In other words, the tax saving is 5,000 euro, which corresponds to the difference between 25 and 20 on the first bracket of 100,000 euro. Minimum tax base. A minimum tax base applies for company with a taxable profits that exceed 1 million euros via the limitation of certain deduction. The system is quite simple, actually. The deductions are fully deductible up to 1 million. And on the profit that exceeds 1 million euros, the deduction will be limited to an amount equal to 70% of the remaining taxable base. So the remaining 30% is fully taxable at the corporate income tax rate. Just note that some deductions are excluded from the limitation and thus fully deductible, but I do not go into further details regarding these aspects. You just have to remind that in Belgium we have a minimum tax base on the benefits which exceeds 1 million. The tax consolidation regime, which is an option. This is a new regime which exists since, if I'm not mistaken, 2019. A tax consolidation with respect to corporate tax can be requested by a group company, so it's not automatic, you have to request it. Under this group contribution regime, Belgian companies and permanent establishment of foreign companies can compensate taxable profits with current year's tax losses if certain conditions are fulfilled. The two main conditions are that 90% of direct shareholding between the group companies or via a parent company is needed, and the group companies must be affiliates for at least the last 5 financial years. From my point of view, these two conditions are very strict, so decrease the interest of the regime since it's 90% for 5 years. It's not simple to respect. Transfer taxable profit can only be offset against current year tax losses and not against carried forward tax losses that have been generated in the past. Please note also that some companies, such as investment companies and regulated real estate company, are excluded. And from the financial point of view, the company must compensate each other for the tax burden of the group contribution. Therefore, the tax consolidation is financially neutral on a group level. Regarding the corporate income tax and the local income tax, there is no tax on the regional or local level. I just mentioned that regarding immovable assets, mainly lands and buildings, which are within the Belgian territory, they are subject to an immovable tax, which is levied locally. But strictly speaking, it's a local tax, and it's not really linked to corporate income tax, but I just mentioned it. Finally, regarding income tax, I think it's interesting to briefly focus on the tax treatment of incomes related to shares, given the pretty interesting Belgian tax treatment. The first thing is the dividend incomes. It is actually an application of the parent subsidiary European directive, so it's not purely Belgian, but well, the internal legislation provides the rules. The dividends received by a Belgian company can be tax exempted if 3 conditions are met. It's cumulative conditions. The first one is a minimum participation condition. The recipient company must have, at the moment of attributions, a participation of at least 10% or an acquisition value of at least 2.5 million in the capital of the distributing company. So this is minimum participation condition. The second condition is a minimum holding period conditions. The beneficiary of the dividend must have been holding the full legal ownership of the underlying shares for at least 1 year prior to the dividend distribution, or commit to hold it for a minimum of 1 year if the period is not reached at the moment of the distribution. And finally, the third condition is a taxation condition. The dividend income received must have been subject to tax at the level of the distributing company and its subsidiaries if the former company redistribute dividends. The dividend received, it's quite normal as condition since we will not benefit of the deduction if the dividend comes from a tax haven company. Capital gains on share. Actually, the net capital gains on share are fully tax exempt if the same three conditions as the DRD, the dividend received deduction, are met. So it's quite new also. Before it was there were no conditions, but now there are conditions the same as the dividend deductions. The conditions are entirely aligned within the condition to benefit from the dividend received, and if the conditions are not met, the ordinary corporate income tax rate will apply. In other words, 25%. Or 20% if the company can benefit from the reduced tax rate. Interest rents and royalties, I mentioned them, but actually there is no specific tax regime which will apply. So the general CIT, corporate income tax rate, will apply 25% or 20% if the reduced rate applies. Besides the corporate income tax, it exists, of course, in Belgium, some indirect taxes, which are not as such linked to the income of the enterprise. First of all, as you know, the value-added tax, VAT, will apply. This is not a specific regime in Belgium, since the Belgian tax law applies the VAT European directive. Therefore, this part will just be a brief reminder of the VAT system, but you have to remind that Belgium will just apply European legislation. The scope will be the following transactions are subject to VAT in Belgium if they are considered to take place in Belgium: the supplies of goods, services, acquisition of services, importation of goods, intra-community acquisition of goods, and the self-supply by a taxable person. More interesting, the VAT rates. In Belgium, the standard VAT rate is 21%, but there are reduced VAT rates on many other services and goods. I will just give some examples. I will not mention all the services and goods which can benefit from the reduced VAT rates, but I will provide you some examples. Reduced rate of 12%, restaurant and catering services, excluding beverage, which are subject to 21% VAT rate. Certain combustible material. 6% works on immovable property, but limited in time and with quite strict restrictions. Basic necessities such as food and pharmaceutical, hotels, copyrights, etc. And are VAT exempted healthcare services, excluding certain types of cosmetic surgery. It's quite new rules, which applies from 2022. The exemption will actually not apply for medical services that have only for medical services that have therapeutic purpose. In other words, not for cosmetic surgery. VAT exempted also education services, banking services, interest charges, insurance services, land and real estate, but with specific condition. I will not go into further details. And property leasing and letting, being understood that option to the VAT is possible, but again with specific conditions. The VAT grouping. What is the VAT grouping? Independent legal persons can be treated as one single taxable person for VAT purpose if they are closely linked financially, economically, and organizationally. For VAT purpose, all supplies of goods and services to or by the group members are deemed to be made to or by the group itself. And but again, it's not automatic. You have to request the application of the regime, and specifics and strict conditions are required, since you have to prove that there is a close financial, economic, and organizational link between the company that will form the VAT group. But this is a kind of tax consolidation we have in Belgium. We also have in Belgium import duties, property taxes, and registration duties. Sorry, import duties, goods coming from outside of EU, but again, it's not something which is special in Belgium. It's just a common system in Europe. Goods coming from outside of the EU and imported into Belgium are subject to import duties. Import duties are calculated based on three main elements: classification, origin, and valuation. Regarding the property taxes, I mentioned before that immovable properties are subject to an immovable tax, which is also called a real estate tax, due on a yearly basis to the region in which it is located. In two words, the base is the cadastral income of the property, which is nothing other than a deemed rental income. Registration duties. Actually, purchase and transfer of real estate located in Belgium, including building, except the new buildings, which are subject to VAT. So there is, again, strict condition to be subject to VAT. They are subject to registration duty in Belgium. Applicable rates will depend on the region where the real estate is located. For the Brussels and Wallonia region, the rate will be 20.5%, and in Flemish region, the standard rate is 20%, but where the various lower rates exist. As an example, the rate is 3% for the purchase of the only and own home, which is quite interesting. So you will have understood that it is more interesting to acquire real estate in Flemish region than in Brussels and Wallonia region. Maybe these two regions will align on the Flemish rates in the future, but for the moment, it is not the case. So if you have to purchase a real estate from a tax point of view, it will be more interesting to purchase something in Flemish region. If the transfer of real estate is subject to VAT, which is the case if you purchase a new considered new real estate, a new building, no registration duties will be charged, and in principle, no registration duty is due on capital contributions, since an only fixed fee of €50 will be asked. Finally, social security contribution. Strictly speaking, social security contribution are not a tax, but I mentioned them since this is a charge that the company will have to pay. Will have to pay when it has workers. In 2 words, again, employers' social security contribution in Belgium is more or less 25%, but for a certain type of employers, a structural reduction may apply next to specific target group reductions. Employee social security contribution is 13.7%, but again, with some automatic reduction which can be applied. Well, I will conclude the presentation by speaking about some existing tax incentives. Alexander and Lorraine talked about briefly this, which makes Belgium an attractive location for conducting R&D and IP activities. The tax incentives are intended to support investment in innovation through research and development, including the development of software, and it benefits to a broad variety of industries. The first tax incentive is innovation income deduction. The innovation deduction is an incentive which provides for a deduction of 85% of the qualifying net IP income, effectively reducing the related maximum effective tax rate to 3.75%. It's just the application of a 25% of income tax rate to the remaining 15% of the net income, net IP income. The innovation deduction applicable to Belgian company as well as is applicable to Belgian companies as well as Belgian permanent establishment, irrespective of the size or industry, and the deduction applies to self-developed IP rights as well as IP rights acquired or licensed from related or unrelated third parties. So this is a quite interesting tax incentive. The second one is the investment deduction. The investment deduction is a deduction from the tax base in addition to the normal tax depreciation on, amongst others, qualifying patents, environmentally friendly R&D investments, and energy saving investments. A company can benefit from a one-shot investment deduction of 13.5% of the acquisition value of qualifying investments. And with respect to environmentally friendly R&D investment, a company can also opt for a spread investment deduction of 20.5% of the depreciation of qualifying environmentally friendly R&D investment. In other words, the investment deductions are a complementary deduction which adds to the normal tax depreciation on the investment. Patents and R&D tax credits, actually it is an alternative to the investment deduction for patents and R&D, so it is one or the other. The key advantage is that the tax credit for patents and R&D is refundable. It has not been deducted for the last 5 years, for the 5 subsequent tax years. Another tax incentive is the reduced payroll tax for qualifying researchers. Actually, it is 80% of the payroll tax withheld from wage of qualifying researchers by a Belgian company or a permanent establishment, again, does not need to be remitted to the tax administration if the researcher are employed in R&D programs and have a qualifying degree. As an example, a degree in applied science or in biotechnology, and for the employees, personal tax liability, the tax administration considers the payroll withholding tax amount as entirely withheld. So, in other words, the company can keep the excess of 80% in order to use it to finance R&D. I think that's it for the global overview of the Belgian tax system. It is, of course, impossible to be exhaustive in 20 minutes, given the complexity and the numbers of rules relating to the taxation in Belgium. But I hope the webinar will help you to get a clearer perspective. If one of your clients considers to set up a business in Belgium, and of course, and again, DNF and CFG stand at your side if needed. Thanks again.
Thank you all of you.